Hey, what's up, good people? Welcome back to Stock Up with Larry Jones. Hit the like, subscribe, and notification bell. You guys know I'm going to ask you this all the time, right? If you have been rolling with me for a while, continue to hit that like button. Do it right now. It's down there. Thank you. Hey, let's get into it. We got a lot of information. I've been getting spammed a lot. We spend hours cleaning up the spam today, and we're going to continue. Don't fall for it. I don't have a WhatsApp. I don't have any of that. And I'm not talking about some hot crypto. It's all garbage. Just don't fall for it. We got a lot to talk about. We got earnings coming up. We have big tech earnings. And we just want to go over a few things that hopefully make you a lot of money. All right. So I took a few notes here. But before I go over the notes, let's just look at this. Let's look at what we got coming up this week. So right now, you have SoFi, Whirlpool, and GE Healthcare that is reporting. I do have 125. I just started with 125 shares of GE Healthcare. I brought it to the family before I bought it. I did an option play, which I'm up on, and I actually just have the stock because healthcare is doing well now, and it fares well during a recession. So that's why I got into GE Healthcare. GE is a very old established company that has capital to last through any downturn or will fare well during higher interest rates. All right. So on Tuesday, we have Caterpillar, GM, ExxonMobil, Pfizer, Snap, and AMD. AMD, all right? AMD is a play that I'm looking to get in heavier, but not at this point because chips are not doing so well. Wednesday, we have the FOMC meeting. The Fed will be giving his rate decision, should I say. And then we have Facebook and Peloton. Facebook is Meta, for those of you that don't know. Thursday, we got Apple, which is heavily weighted. Now, remember, these are some of the biggest tech companies on the planet. Meta, Amazon, Google, which is Alphabet. So on Thursday, we have Google, which is Alphabet, Apple, and Amazon all reporting on the same day. And of course, we got Qualcomm, Ford, and Starbucks. And then right behind Thursday, we have the job numbers, okay? The job reports come out. January employment report comes out on Friday. Now, just remember that we covered all of that because it shows you where the market is heading, and it also lets me see that there's money to be made, and you can make some plays based on where you think the earnings are going to be, positive or negative. You could buy the stock right out, or you could do option plays. You can do a call. Remember, call up, put down. So call up, and that's a call, and down is a put down. All right. I just use these for those of you that are new. All right. So the question is, are we in a bear market rally or a sustainable bounce? Is this a sustainable bounce, or are we in a bear market rally? The truth is, no one really knows. You have to make a plan, and you have to go according to what you see from the data that you find, right? So listen to this. It is true that the most dangerous time to trade is between 2 and 2:30 p.m. on Fed Day. On Fed Day, which will be this Wednesday. It is the most, I never trade during that. You guys that have watched me go live with the FOMC meeting, which I will be doing this time, you guys know it's literally like clockwork. Just before Fed Jerome Powell speaks, the market goes up. And then as he speaks, it comes down. And during the middle of his speech, it goes back up. And then by the time he finishes, about 75% of the time, it goes straight down. Now, what could you do? You could think about the day before. Some people, I'll just say this, anything I say is not a suggestion for you to buy, hold, or sell. And I'm not discussing what I'm doing because some of what I'm doing is risky. But if, excuse me, I was eating lunch. I'm sorry. I'm not editing this out. But if you have seen something and did a play and it was successful 85% of the times, then you're winning. Just remember that. Even if it comes up bad one time, if the track record is 85% wins, then you're winning. No one wins all of the time. You're going to have some losses, right? And so what I started doing this bear market, so that was pretty much all of 2022, is I would go into a call option the day before an FOMC meeting, which will be on a Tuesday, and I would be out of the play before the Fed starts talking, kind of a buy the rumor, sell the news. Now, you have to be careful. You have to look at, sometimes I'll do the earnings, say Google, Meta, based on what I think. The last time I thought that Meta would be down negative, so I did a put on Meta. I shared it with you guys. I made $12,000 and then another $4,000, but I went in heavy based on all of the data and research. This time, I'm not that sure. Then you can also do a TQQQ. But remember, TQQQ and SQQQ are not investments. They are not long-term holds. They are swing trades. And I rarely hold them over 2 days. That's me. Let me know what you're doing, because you can get stuck. Most of the times people will get stuck. So I'm just going to continue to talk, give you guys information, and you can figure out where you can make some money. All right? Or just sit still. Sometimes trading is just sitting still. All right? Okay. If the Fed comes out hawkish, which he probably will be, and then the following day the job numbers come in strong, the market is going to tank. It's going to tank, good people. All right. So the good news is we had 4 consecutive months of low PCI. Remember, we had the PCI numbers last week, and the core PCI numbers is what the Fed tends to read as a gauge of inflation. Okay. And then we had 2 consecutive positive GDP numbers consecutively, right? That's good for the market. So if the Fed said, hey, we're only going up 25 basis points on Wednesday and we're going neutral from there, we could be back on a bounce and running up from here, everything. But that is the good news. Here is the bad news. The bad news is the Fed is still scared of stagflation. He's scared of inflation coming back to haunt. You hear about Volcker, who was an old Fed chair, and you hear about the mistakes that were made then. And if inflation comes back, then we could head into something that's called stagflation. That's actually worse than a recession. And we don't want that. And the Fed is going to make sure that does not happen. The only way he can make sure that does not happen is to remain hawkish, even if he just does it verbally and does not actually do it. All right. Tech has come back the most now in this bounce because it was the most beat down in 2021. Right. That's what just happens. But we also know that the biggest tax loss harvesting that has happened in years just happened in 2022. As a matter of fact, the last time we had as much tax loss harvesting, meaning you were taking a loss tax selling, the last time we had as much as we just had was 2008. And what was 2008? A recession. All right. So just take all of this data and just say, hey, how can I make money? Or should I just sit still? Should I just be in cash, ready to buy? Because we have to look at things in the short term and the long term. We have to look at the micro and the macro. Micro, we can make money. I've been making a little money, which I share with you guys in the micro environment. But in the macro sense of things, I'm still 85% cash. You do not have to follow me. I'm just sharing with you guys what I am doing. And I'm just going to be forthcoming. So if I miss the bottom and if everything takes off and, everything just shoots up, then I've missed the bottom. Larry, are you really scared of missing the bottom? No, I am not. So here's what happened today, right? Look at this. The Dow, S&P, and NASDAQ were all down. NASDAQ and the S&P were down a lot, right? But here's why I'm not. Let's go over the last year. Here's why I'm not worried. Just look at this. Just look at this. So this is the last year, right? So even if we missed the bottom, or we thought we missed the bottom, we're not at the bottom, right? I can start trading right now in the entire stock market and still be better than we were at the top of 2021. And so I will end by repeating what I said before. I'm not trying to time the bottom. That's a fool's journey, because if you time the bottom, you have to time the top perfect. You have to get it perfect twice. And so there is no one on the planet that is that good. No one, including your boy. So what I will say to you is I'm literally looking for long-term investments in a bear market and not focusing on trades. And so I don't care what the price is. When it comes to big tech stock, I'm trading evaluations right now because I'm taking 85% of my cash and putting it in the market, and I'm looking to see what it yields me in the next 10 years. So I'm going to take my time and be careful. So you do what's best for you. Meanwhile, I'll do some swing trading in between. What else I wanted to share with you guys? Let's see. Lucid is still up, but it's down today, 8%. Let's see. Commercial. Tesla's down 6%, not much, still doing good. And let me talk about, you guys hear a lot about Chat GPT. I can never say those words correctly. Inline, GPT. So I just wanted to, for those of you that don't know, here's a play that I may be entering into. I actually will be entering into a call option on Baidu, which is a Chinese company. It's like it's a tech stock. It's like our Google or Microsoft, and they are going to be implementing something like Chat GPT, and they are going to have AI integrated with their software, right? And so just like Microsoft did. And so I'm going to do a call on Baidu for not just that reason, but the whole Chinese market is just reopening. And I'm going to be doing a call on that. And it's not going to be a long call. I will be doing it probably until March, because March is when they're supposed to implement it. So I may go out to April. I'm not gambling. I'm not throwing 85% of my money into it. I'm just going to buy a small amount and see how that goes, and then probably add to that. Okay, good people? Listen, I want you guys to trade carefully. And just remember, trading during an FOMC meeting is extremely, extremely dangerous. I won't be doing it. I'm generally out before that happens. And a lot of people says, hey, why don't you hold, straight through? Because in a bear market, I'm about limiting my risk and holding my cash. And so if you think you've missed the bottom, just take the overall stock market and zoom out 14 months, and you will see that there's plenty of upside, especially with a growing GDP. All right, good people, listen, download the top link, be able to trade hours before the market opens and hours after it closes. You can be in plays and be out. A lot of times I am in cash profit by opening bail and make a deposit. And depending on your deposit, you get up to 15 free stock. That will be the top link below. For those of you on your cell phone, hit the description of this video and go to the drop down and download that and fund it with a minimum of $100 today. All right, good people. Hopefully something I said shine a light on you, on some of your plays, helping you to be a better investor and helping you in your trading journey. Hey, I always say in signing off, and I really do mean it, live, love, laugh, learn, and earn now, all right? We'll see you tomorrow. Peace.